Hi, this is Nikki James. Today I'm going to talk to you about credit and credit depth and credit scores and try and help you see how to achieve the best credit score that you can and look at what lenders care about. So lenders in the mortgage world look at different things than a car lender or somebody who's lending you for other reasons. It's a little stricter rules in the lending world, mortgage lending world. So I'm going to go a little bit of detail on that. So the best thing that you can do to start off with is make sure that all of your cards have at least only a third of the balance outstanding, a third of the credit available outstanding, so that your balances are under a third. That is going to help your scores the best. Obviously, not carrying a balance is the best thing to do, but if you do have a balance, you're much better off having it under a third on 3 credit cards than having 3 credit cards with only 1 maxed out. So spread it across the 3 or have them paid off. You don't want to keep paying your credit cards and you want to keep using them. You don't want to not use them and think, hey, I never use credit. That's great. We want to see you using credit, but having just that third balance is super important for the score. Another note, just if you get a collection, make sure to pay it. Those are one of the things that do affect your credit right away, and they can take a while to repair. Except that, well, first of all, don't go to collection if you can. But if you do, talk to your mortgage lender before you pay it, because if it's an old collection, it actually can become current and hurt your score even more. So don't pay it off right away if it's been on there for a while. Best thing is to try and watch them not go to credit from the beginning. Medical, the worst, they go fast, but they do actually remove them if you pay them. So it's important to watch those. Watch those small doctor's bills. They do pop off to collection fairly fast. Okay. So that's the scores. That's just really high level, the best way to maintain a good score. There's obviously lots of other things to do, and not having late payments is hugely important. But one thing that we look at in the lending industry is trade lines and depth of credit. Now, not all loans do. So a loan up to $548,000 nationally doesn't care about depth of credit. But once you're going above that, in much of the country, that's what we consider a jumbo loan or a non-conforming loan. We do care about depth of credit. So what we want to do is we want to see, in the perfect world, at least 3 trade lines. So a student loan, a car loan, and a credit card, or 3 credit cards, or 2 student loans and a credit card, any combination of that. That will give you the access to the most amount of loans that are out there. Not every loan requires that depth of credit, but it will give you access to all of the loans out there. Some of them do require the depth, and so it would potentially have you not have access to certain loans if you didn't have that depth of credit. Just a quick note, we also look at rental history. So that's another way that we look at, do you pay your bills on time? And rental history, if you're currently renting, is very important. If you're paying your roommate and then your roommate's paying the landlord, it's hard for us to track that, especially if you say, hey, I'll pay you 1 month, the next month I paid for the vacation, so I'm not going to pay you. That gets very complicated. Just make sure it's an automatic payment that goes out and pay the landlord. Also, don't use Venmo if you can. It's getting easier to track through Venmo. They're doing more statements for us now, but it is a little challenging to prove it that way. So especially if you're paying your roommate and not the landlord. So those are just some high-level tips for how to look at credit depth that matters for a mortgage and credit score. There's many other things you can do with credit score. Obviously, if you've had challenged credit in the past, there's strategies for getting out of that, the lower credit scores. But if you're just starting off in your credit journey, pay bills on time, use credit. It's good. We want you to use it. Even if it's just 1 tank of gas each month and you pay it off in full, awesome. We love that. You don't have to maintain a balance to actually show good credit history. We just want you to use it. So not using it is actually bad. All right, that's it for credit today, and I look forward to seeing you on one of my other videos. Thanks.